Welcome to another video from thetraderguy.com, and this video is going to focus on the news that has just come out Friday night in New York time of the S&P downgrade of U.S. credit rating from AAA to AA+. Not the end of the world in the big scheme of things, and especially with the global economy falling apart, I don't expect Treasury yields to skyrocket or anything like that, but there will almost undoubtedly be a reaction in the bond markets, and as such, you'll see interest rates rise a little bit. But truthfully, by the time it's all said and done, with all of the other issues around the world, it's very possible that the rates will stay just as low, if not lower, because remember, we've got a lot of problems in other places, such as Europe, and as long as that's the case, there's a really good chance that this won't be as big of a deal over the long term. Now, in the short term, I expect a lot of movement in the currency markets. The first pair that I would look at would be the dollar yen, and that makes sense because the very first people who are going to be trading will be the Asians and the Antipodeans, the Aussies and the Kiwis. And the yen tends to move the most, or at least have the most volume during Asian trading, and as such, that will be our first hint. Now, what I would suspect is that we would see this pair fall. The dollar would lose some value against the yen. It's a couple different reasons. Number one, the dollar, dollar bonds, dollar denominated bonds, I should say, have just lost a little bit of ratings, and because of that, the demand might fall for them slightly. There's certain funds that can't get involved unless it's AAA, etc., etc. Not a big thing in the big scheme of things, but there will be some money moving around for that. Then there'll be the traders who are just doing the knee-jerk reaction, etc., etc. The yen, of course, is the safe haven currency. Having said all of that, on Thursday we had an intervention, and the Bank of Japan is talking to other central banks who've been very open about it, how they're trying to get a coordinated intervention effort. If we see a meltdown on Sunday night, Monday morning in Tokyo, you could see that intervention like right away. And if that's the case, that could be a very, very dangerous currency pair to trade. And in fact, it's probably, although this is going to be one of the most interesting ones to watch, it's probably the last one I'm considering trading personally. A pair that'll have to be watched, if nothing else, to just show relative strength of the dollar and how good or bad things really could get, would be the euro dollar. The euro has a lot of problems as it is, and I have as a line to confirm a bull flag breakout is 145. If we can get over there, then I think the pair goes much, much, much higher. And if that happens, even with all of the issues in Europe going on right now, that would be extremely bearish in the dollar. That would mean that the dollar is probably melting down against many other currencies beyond the euro, because these are the two ugliest currencies at the moment. And if the euro is not as ugly as the dollar, then that is bad, bad, bad news for the dollar. So I would watch this chart as well, just to see what exactly it's doing. Whether or not I would buy the euro, that might be a different story, because let's face it, there could be news come out of the, something out of the eurozone overnight, and you wake up and you're 300 pips down. And the last chart I'm looking at is the Aussie dollar, and the reason I'm looking at this one is because a couple different reasons actually. You can see that technically it is right at support on the weekly, and it stopped right at support. We ended up Friday with a doji that will be easy to trade, at least in theory, because your signals are which end does it break. Really, if it breaks lower, then there's massive support down at 102. But if it breaks higher, then we probably are going to try to, stay in this consolidation area. So it'll be interesting to see what happens. The reason the Aussie might be interesting is because gold should get a bid because of this, and of course the Australian dollar follows the gold markets over time. So it's very possible we may rise on this. But out of all the things that I've said, we may get a flight to safety. The truly ironic thing is if we get a flight to safety, we may see things like the Aussie dollar melt down in the dollar's favor. We could see the euro melt down in the dollar's favor. The Kiwi dollar might melt down in the dollar's favor, ironically, as the U.S. debt gets downgraded. So I think there's potential for some very volatile, whippy moves because there are going to be traders who think in different ways. There are plenty of traders out there that think that this downgrade really isn't a big deal, and in the long run, it really isn't. But there should be reaction, so it'll be very interesting to see what happens. I think the Euro US dollar flag will be one that will be very interesting to watch because, again, I think if the euro starts gaining on the dollar rapidly, that'll show you how bad off the dollar really is. And my suspicion is if we're going to have one of these wild moves, we'll have a gap right at the open, and you should know relatively quick. The Australian dollar banging around in this area really wouldn't be a surprise to me. And that of course would mean a move up. Probably one of my more favorite currencies at this moment in time, even though we had the precipitous sell-off, just simply because it is attached to gold, and I really think gold should take off. The other one that will be interesting to watch will be this dollar Swiss, because of course there's the safe haven trade, and we have had a couple in a row shooting stars at the bottom of a downtrend, which I call continuation pin bars or contend pins, or sometimes I'll call them continuation shooting stars. It shows that we've tried to rally a couple times and failed. Friday we actually broke lower. So in a lot of ways, the cleanest trade might be the dollar Swiss, just as it will be a flight to safety and it will be an anti-dollar play. So in review, I'll be watching the euro for signals. The dollar yen will be interesting to watch. I would stay out of it, but it'll be very interesting to watch. And then the Aussie dollar and the dollar Swiss could be two of the better currency pairs to trade if the markets react to this, which I really can't see why they wouldn't. But we could get some really, really whippy action. And like I said, ironically, the Aussie could melt down as assets are sold. But my suspicion is it won't, and at least initially. And then the dollar Swiss, everybody loves the franc right now, anyways. And unlike the Bank of Japan, the S&B really has been beaten up hard by the appreciation of its currency and has lost several times in a row. I wouldn't suspect that the S&B get involved through intervention right away. I think out of all the currency pairs, though, the dollar Swiss may be the cleanest setup. Anyway, guys, got any questions? Feel free to email me at chris@thetraderguy.com. Thanks.